Close to midnight. The room is lit only by the cold blue glow of your laptop screen and the phone sitting beside it. On your investing app, the balance is impossible to ignore. $500. Not a huge amount, but enough to make your heart beat slightly faster than normal. You've been scrolling through Reddit, then TikTok, then YouTube finance videos. Everywhere you look, people are talking about a stock that's supposedly about to explode. One guy claims he turned a few $1,000s into a number so big it makes you stop and stare for a second longer than necessary. Another comment says anyone who doesn't buy in now will regret it later. And after a few minutes, it starts feeling like the entire market is moving forward without you. Like everyone else already got the map while you're still standing outside the door. The truth is, you don't actually understand what the company does. You haven't read the earnings report, never opened the 10K. You don't really know what a PE ratio means, why market cap matters, or whether the business model is even sustainable long term. But you do know one thing: everyone is talking about it. And somehow, that alone is enough to make you uncomfortable. Your finger hovers over the buy button. At that point, your mind is no longer analyzing anything. There's only one quiet but powerful thought repeating in the background. What if I miss this? In that moment, you believe you're about to start investing. But the truth is much harder to hear. You didn't enter the market through logic. You entered through fear of being left behind. Then you hit buy. Just one small action, yet somehow everything inside your head changes color afterward. Before this, the stock market was just something people talked about on YouTube, Reddit, CNBC. Now it exists inside your own hands. Your first few shares appear in the brokerage app, and you stare at them like you finally stepped into a room you never thought you belonged in. The price moves up slightly, not much, but enough to make you feel smarter. You refresh the app while brushing your teeth, during lunch breaks, even while lying in bed at night. Every time the numbers glow green, a very dangerous feeling starts growing inside you. The feeling that you understand the game. Then the next morning, the stock drops. Not a crash, just a decline, but enough to make your chest feel heavy again. You stare at the screen longer than usual, telling yourself it's only temporary volatility. You don't sell, not because you have a real plan, but because selling would mean admitting you were wrong. A few weeks pass. The stock never recovers the way you imagined it would. The amount of money you lose isn't life-changing, but it's enough to make you quiet. And the real pain isn't the loss itself. It's the moment you realize you never bought because you understood the investment. You bought because you wanted proof that you weren't standing outside the game anymore. A few months later, you return to the market. But this time, the feeling is different. You no longer open Reddit just to search for which stock is about to explode. Instead, you start paying attention to different kinds of people. The ones who aren't bragging about overnight gains. The ones talking about index funds, S&P 500 ETFs, compound interest, and letting time do most of the heavy lifting. At first, everything sounds incredibly boring. No massive pump, no glowing green screenshots, no feeling that you've discovered some secret Wall Street forgot to hide. Just a brokerage account being used more seriously, an automatic $200 monthly transfer, and a plan so ordinary it would never go viral on TikTok. But somehow, that ordinary routine slowly pulls you out of chaos. You realize the last time you lost money, it wasn't because the market was cruel. You lost because you entered the market asking the wrong question. You only asked, what should I buy to win fast? You never asked, why is this worth holding in the first place? That question doesn't make you rich overnight, but it forces you to slow down. And sometimes, in investing, slowing down is the first moment you actually start moving forward. During the first month, you barely feel anything at all. $200 automatically leaves your checking account, moves into your brokerage app, then quietly settles into an S&P 500 ETF. No victory music, no feeling of beating the market, just a small transaction so silent and ordinary you could almost forget it even happened. But strangely, that's exactly what starts changing you. You stop staying awake until 1 in the morning, hunting for whatever stock Reddit is hyping next. You stop opening your app 10 times a day just to watch a chart move a few cents. Instead, you begin reading about time horizons, about how a 20 or 30-year plan doesn't need to excite you every morning. It only needs to be clear enough that you don't destroy it on your weakest emotional days. There are still moments where you feel tempted. You watch people on TikTok posting huge short-term wins, and part of you wants to jump back into the chaos again, wants to speed up, wants the feeling that you're not missing out on something bigger. But then you look back at your plan. It isn't flashy. It isn't viral. It won't impress anyone online. It's just you, consistently putting money into the market while learning how to stay still in a world constantly screaming that you need to do something immediately. And that's when you finally understand something important. Good investing doesn't always make you feel excited. Sometimes, it simply makes you grow up. Eventually, there comes a stage where index funds start making you feel too safe. Not because they're wrong, but because you've learned just enough to want more. You start opening 10K reports, reading earnings reports, underlining words like revenue, margins, debt, cash flow, valuation. You create your own watch list inside your brokerage app. Every night, instead of mindlessly scrolling TikTok, you sit in front of your laptop, studying numbers like you're decoding some hidden Wall Street secret. For the first time, you don't buy just because someone online says a stock is hot. You want to understand the business. You want to know where the company makes money, how it grows, what advantage it has, and whether management can actually be trusted. When you talk to friends, you start mentioning intrinsic value. You no longer feel like a beginner, but that's also where the danger begins. Because the more financial terms you learn, the easier it becomes to mistake vocabulary for real understanding. You see a stock drop and assume the market is wrong. You read a few reports and start believing you found something everyone else missed. A much more subtle feeling appears inside you. It's no longer FOMO. It's ego. And ego doesn't make much noise. It simply whispers that you're smarter than the crowd. The market usually doesn't need to scream to correct you. It only needs to stay flat long enough, or move against you deep enough, for you to realize that knowing more professional terms does not mean you truly understand the game. Then one day, you open a chart, and suddenly, it's no longer just about whether a stock is going up or down. Candlesticks, moving averages, RSI, MACD, all of it begins appearing on your screen. Those colored lines crossing over each other make the market feel less chaotic. Almost like there's a hidden language underneath the noise, and if you study it long enough, you'll be able to read what everyone else misses. You join a few Discord trading communities. You scroll Reddit more often. You watch people draw support, resistance, breakouts, reversals. Then you buy an extra monitor, putting charts on the left, P&L on the right, and news in the middle. Suddenly, index funds feel too slow, too quiet, too emotionally flat. Your first trade wins, not by much, but enough to ignite the most dangerous feeling of all, the belief that you found a formula. You start entering trades faster, more confidently, with less patience. A green day makes you feel special. A red day makes you question everything, including yourself. Your mood no longer belongs to you. It gets pulled up and down by every candle, every reversal, every number inside your account. You tell yourself you're learning technical analysis, but in reality, the market is testing your nervous system. And this time, the real test is not on the chart. It's in how you react when real money starts moving against you. Then you hear about options. At first, it doesn't feel like gambling, at least not in your mind. It sounds smarter, more structured. You learn about delta, gamma, theta decay, implied volatility. You watch videos explaining call options, put options, earnings plays. And the more you learn, the more it feels like you've entered a different level of the market. No longer just buying stocks and waiting. Now you can control more with less capital. You can bet on a major move. You can turn a small amount of money into something meaningful, if you're right. That word if feels small at first. Then it swallows the entire account. You put money into call options before earnings. In your head, the story is already clear. The company reports strong numbers, the stock jumps, the option explodes, and you finally get the win that makes every previous loss feel worth it. But the market doesn't follow the story you wrote in advance. The stock drops. The premium evaporates. Theta doesn't wait for you to calm down. From around $6,000, the account falls to only a few $100s in a short amount of time. You stare at the screen and can't even feel angry anymore. Just empty. You call it tuition. But deep down, you know the truth. That wasn't tuition paid to the market. That was the cost of ego, of believing confidence could replace discipline. And leverage doesn't care how strongly you believe you're right. After that drop, you don't open the app for a few days. Not because you stopped caring, but because every time you look at the account, something uncomfortable moves through your body. Regret, shame, anger at yourself because you saw the risk and still walked in like this time you were somehow different from everyone who lost before you. You used to think quitting was failure. But now you understand there's a quieter kind of failure. Coming back to the market just to make it back, just to prove you weren't wrong, just to recover the feeling of control you lost. This time, you don't do that. You open a journal file. You write down every trade, why you entered, why you exited, what you were feeling at the time, whether there was actually a plan or whether you were just afraid of missing out. You read back through what you wrote and start seeing a repeated pattern. The biggest problem was never the chart, the earnings report, or one unexpected drop. It was the way you reacted. When you won, you became confident too quickly. When you lost, you wanted revenge against the market. You weren't investing like someone building wealth. You were acting like someone desperate for validation. Realizing that doesn't feel good, but it wakes you up. You stay in the market, but you don't return with the same old ego. For the first time, your goal is not to be right quickly. It's to survive long enough to understand where you were wrong. Then you start reading more slowly. You stop jumping from one video to another, searching for the next signal. You open The Intelligent Investor, read Warren Buffett's shareholder letters, replay old talks from Charlie Munger. At first, none of it feels as exciting as trading. There's no adrenaline, no minute-by-minute feeling of winning or losing. But the more you read, the more you notice a different kind of strength, the calmness of someone who truly understands what they own. You stop watching CNBC every morning. You no longer let every headline about the Fed send a shock through your chest. Your portfolio becomes smaller, not because you're afraid, but because you'd rather deeply understand a few businesses than hold dozens of companies you only recognize by name. You begin focusing on moat, management, cash flow, balance sheet quality. You ask yourself whether this company can still be strong 10 or 12 years from now. When stocks fall, it still bothers you. You're still human. You still have moments of doubt, still feel tempted to sell just to relieve the pressure in your head. But unlike before, you no longer panic because of a red chart. Instead, you return to the original reason you bought it. Has the company actually changed? Is the business weakening, or is the market simply afraid right now? The price is falling, but has the value truly disappeared? Other people ask what the Fed will do next quarter. You start asking what this business could become over the next decade. And that's when you finally understand something important. Long-term investing is not the absence of fear. It's understanding clearly enough why you continue holding even when fear appears. Then, eventually, you realize the market is not just a place to buy and sell. It's a place where your personality gets exposed under an extremely cold light. When the money is small, mistakes hurt but still remain private. But if one day you manage money for other people, everything changes. Behind every number is no longer just your own account. It could be limited partners, Investor trust, AUM. Institutional allocators asking not only how you make money, but where the real risks actually are. At that point, intelligence alone is not enough. The trustworthy person is not the one who sounds smartest on Twitter or posts the cleanest charts online. It's the person who understands their edge clearly, knows when it works, and more importantly, knows when it can fail. You begin respecting slower answers, decisions that don't need attention, people who no longer feel the need to prove they're brilliant every single day. You think about Warren Buffett sitting quietly in Omaha. He doesn't need constant trading activity to feel productive. He owns businesses. He reads. He waits. He lives simply, thinks in decades, and allows time to filter out the noise that most beginners mistake for opportunity. At first, the market feels like fast money. Then it feels like information. But eventually, it starts feeling like a character test. Stocks are simply things you buy. ETFs are tools. Options are leverage. Financial statements are just another language. The real investment is the person you become after all of it. Less impulsive, less desperate for validation, and calm enough not to destroy your future over one emotional moment in the present.